Hello investors, in this video I'm going to look at Suncor. First I'm going to look at valuation and whether Suncor is overvalued, undervalued or valued correctly. Then I'm going to look at Suncor's technicals and fundamentals, which are going to describe how I arrived to my valuation metrics and whether it's a safe investment. Okay, so let's start from the valuation. So we're going to assume three scenarios. For valuations, we're going to assume three scenarios: normal case, best case, and worst case. We're going to assign to each scenario an equal share of 33%. We're also going to make an assumption that in 2022, Suncor is going to generate $8 per share in free cash flow. This is not really true because if you look through the fundamentals part of the video, in reality, Suncor is likely to generate at least $10 or even more per share in free cash flow. However, just for the sake of valuation, I'm going to use lower number just to be even in the normal scenario, to be more conservative. So in our conservative scenario of $8 per of free cash flow per share, I'm also going to assume the cash flow per share growth of just 0% for the first 5 years, and in the next 5 years I'm going to assume a 4% growth. I don't really believe in this scenario. I think oil is going to do better, even despite the fact that we may have already entered a new economic crisis, or we're entering a new economic crisis. Nevertheless, I'm going to use these numbers just to be conservative, even in my normal case valuation. So 0% growth, 4% growth, terminal multiple of 6. We are currently trading in the with the terminal multiple of around 6 to 7. So roughly same number, and I'm going to use discount value of 12%. With these numbers, we are arriving to a price of almost $72 a share. So clearly we are undervalued. Right now we are trading at around $48. Case number 2. So even with these conservative numbers, and to which I say normal, our normal base scenario, we are undervalued by quite a bit. Then I'm going to use best case scenario. In the best case scenario, I'm still going to use the $8 of cash flow, which is not really true. But I'm going to say that we're going to grow at 5% over the next 10 years. In this case, our value is going to be, and we're going to use terminal multiple of 7, so which is still quite conservative. In this case, our value is $82 per share. And in our worst case scenario, I'm going to use the, I'm going to assume that the market is going to collapse, and we are going to see a real growth rate of minus 10% over the next 10 years and 4% positive growth over the following 5 years. So we are going to enter a really declining situation. So I'm also going to use a terminal multiple of just 4. So this is a really tragic scenario for the company. In this case, I'm arriving to the present value of the company of just $32.50. So when I sum up, all of these three scenarios are really, even the normal case, the best case, they're still quite conservative. The worst case is obviously quite looks quite drastic. So when I use all of these three scenarios, my sum is $61.50. So the current value right now is $48. So we are undervalued by at least 37%. I'm going to say that at least because while using these metrics, I specifically used the worst numbers I could imagine. So let's move to the technicals.
Technically, let's start from the monthly chart. On the monthly chart, we can see two trend lines. First is the resistance trend line, resistance level at around $55. which may hold, which may not hold, because it may not be a true resistance, because the company over the past 2 years, the company has bought really a lot of its own shares, so it may not be indicative. Then we also have a support trend line indicating a trend up. Currently the support trend line is at around $41-42, indicating I would probably start, if the price would ever get down to this level. I think that would be a very good level to get in if you have this opportunity. Then on the RSI, RSI indicates that currently Suncor is maybe overbought, but simultaneously there are no divergences on RSI, so so it doesn't indicate that the trend is getting weaker, and it can stay overbought for a long time. Stochastics, same thing on stochastics, it is overbought, but it can stay overbought for a really long time. On Bollinger Bands, we are over the middle line and we are still in the trend up, so wow, nothing really indicative. On the weekly chart, well, again, we see those same trend lines in maybe better resolution. Same things on the RSI and stochastics, overbought, but again, we can stay overbought for a long time, no divergences. On Bollinger Bands, we've just crossed the middle line, indicating that we may have started a new trend. We may bounce from the top line of the Bollinger Bands and bounce back, and then just there is a chance to stick around around this level. So nothing really dangerous here. We are in this triangular formation, and well, we'll see how it goes. On the second page of the financial statements, we can see a summary of the results by Suncor for the last 5 quarters. So we can see that earnings have been growing. We can also see that there was a huge drop in the earnings in the quarter ended September 30th, 2022. That is due to an asset impairment reversal, which is a non-cash item of approximately $3.4 billion. This was related to purchase of a business. Again, this is a non-cash item, so we are not really interested in this. It is not affecting the real cash flow of the company. So the adjusted net earnings for the company are $2.5 billion. So that is okay. Earnings are still growing. They went down compared to the second quarter. This was a little bit due to the oil prices and somewhat due to the fact that summer quarter are not the best for Suncor. Then I would also pay attention to the following thing, that Suncor of the year has actually managed to grow its real production of the physical stuff it gets out of the ground by 3.6%. So we are physically growing. This is great. Then the next thing that is important to me is the dividends. Suncor pays out dividends, which were increased this year and last and this year, which are also likely, in my opinion, to go up. Suncor does a lot of share purchases. So combined, just in the third quarter of 2022, Suncor returned $23 per share. At current value, that represents 2.5% of return for just 1 quarter. This is absolutely great. So we can, if we extrapolate it to the next 4 quarters, we could expect a 10% dividend return, just a dividend return, plus we have a growing business. So this is great. On the financial statements, income statement, we can see a really nice growth of almost 50% compared to quarter ended September 30th, 2021, which is great. We can see a 9 months growth of like very really decent 3-quarter growth. The growth is attributed mostly to the fact that oil prices went up. There was a 3.6 physical growth, which is nice, but again, we are highly dependent on the oil prices. Then we can see a loss for the year of $609 million compared to an income of almost $900 million for the previous year quarterly return for the same period. This loss is attributed to a non-cash item of $3.3 billion. Otherwise, we would see an almost $2.5 billion income. That would be almost 3 times bigger than the income for the quarter ended September 30th, 2021. We see that despite this loss, the company managed to generate almost over $6 billion for the 9 months of this year, which is great. So things are looking great. So if we add up the extra income, actually we have to add $3 billion. So the company has earned almost $10 billion of income in 2020, in 9 months of 2022, which is great, or $4.5 a share. Well, it's actually going to be more than 4.5. Then looking at the balance sheet, assets, well, we've managed to increase assets somewhat. Liabilities, short-term liabilities have gone up because, operational income has gone up by 50%. So yes, the short-term liabilities also gone up by almost 50%. So no surprises here. Long-term debt. Long-term debt is going down. If you look at all the long-term liabilities, they have all gone down. So company has been decreasing its long-term debt, and it's at an extremely healthy and manageable level. So things are looking good. Looking at the cash flow statement, cash flow from the provided by operating activities looks great. Yes, it has been affected somewhat, but it looks really good. Cash flow from investing activities, looks great as well. So cash flow from operating activities minus cash flow from investing activities gives us a very dirty free cash flow. So over here we can see that the company has generated almost $3.5 billion of dirty free cash flow. That free cash flow gives us an opportunity to manage our short and long-term liabilities and pay out dividends or buy back the shares. So the company has plenty of dry powder to put to action, and it does distribute the dry powder via dividends and share buybacks, and by decreasing long-term liabilities. So the company is extremely strong balance sheet wise and has plenty of cash flow to distribute to the shareholders. If you look at for the 9 months results, they look absolutely great. Cash flow from operating activities, cash flow from financing activities, or investing activities, sorry. Things are great. In the financing activities section, we can see that the company is repurchasing back shares, paying out dividends, and it was kind of repaying long-term debt. So things looks good. It in this quarter it stopped repaying long-term debt. As I understand, the company has reached a very healthy level of long-term debt, and they don't see any sense in repaying it. So their goal is now to contribute to the value of the shareholders and just either to continue repurchase their own shares or to distribute dividends. As I understand, they are going to, for now, they're going to concentrate on repaying, buying back the shares. Sorry.
So the company states that as of October 31st, 2022, since the start of the year, the company has repurchased approximately 4.6 billion of its common shares, representing approximately 104.7 million common shares at an average share price of $44 a share. Or equivalent of 7.3% of common shares as of December 31st, 2021. So the company, since the start of the year, the company has already repurchased approximately 7.3% of its shares. It is planning to repurchase additionally 3% over the next quarter. In this section, the company describes in better details the free funds, its free cash flow. So here we see for the quarter ended September 30th, 2022, the cash flow provided by operating activities, and then the company splits the total cash flow in investment activities into two segments. The asset sustainment and maintenance. So this is a really required expense that is absolutely necessary for the company's survival, and economic investments. This is a segment which is theoretically is avoidable. If the company doesn't do this, doesn't do these investments, then it is probably going to stop growing, or it may start even declining very slowly, especially if oil prices start to decline. But it's going to survive. Without asset sustainment and maintenance, the company may actually start crumbling. So this is an absolutely necessary expense. This one is avoidable. But in total, after these expenses, the company generates $3 billion, generated just $3 billion of free cash flow available to repay shareholders. Or it has generated $10 billion in free funds flow in 9 months of the year, which is an absolutely astonishing amount. In this section, I would like to go over again the share repurchase activity, company's share repurchase activity. The company has repurchased 25 million shares of its common shares in just 3 months ended in the quarter ended September 30th, 2022. It repurchased 28 million shares in the quarter ended September 30th, 2021, and in the 9 months of 2022, it repurchased 100 million shares. So that's a lot. The company, essentially in this period, the company, in just 9 months, the company has repurchased over 6% of its own shares, 6.8% of its own shares. Which is a staggering number, and the company is planning to continue doing its repurchases, and it is potentially planning to increase share repurchase program. Again, due to the liabilities being that low, and due to the fact that the company is generating so much free cash flow.
Finally, free cash flow per share. So, for the quarter ended September 30th, 2022, the company has managed to generate $2.25 per share in free cash flow, which is absolutely great. For the 9 months, it has managed to generate $7.50. So, unless something really bad happens, I would see Suncor generating over $10 per share in free cash flow in 2022. Well, as a bare minimum, it's like in an absolutely disastrous scenario, that would be $8. So that's how we came to our free cash flow of $8 per share in the foreseeable future in our valuation models. So if you like this analysis, if it wasn't way too long for you, I'll keep doing them, so like it, subscribe. Cheers, goodbye.